welcome back to another episode of Insider Knowledge. My name is James and today I'm going to be talking about double tax treaties. Let's just be clear, double tax treaties are usually written to affect income tax, capital gains tax, pensions and IHT. I'm only going to be talking about pensions and IHT in this particular vlog. So why am I concerned about this? Often you see adverts talking about avoiding this tax or that tax. With pensions it's often avoid 55% tax with no consideration as to whether there's going to be tax in the country which someone is resident in, either the individual who owns the money or their beneficiaries, and that can be two different countries of course. The worst case scenarios I've seen is where someone has been advised to actually live in a country, remove all assets, remove everything from the UK, and therefore they are going to avoid, for example, inheritance tax in the UK as a result. Sounds great until they're ill. When they're ill, they want to return back. They've got a period of time and see their relatives in the UK. They return back to the UK, and what happens? So you've got to be very clear in your mind to actually avoid things like tax in inheritance tax and pensions. You are going to really have to consider all the tax rules, not just in the UK, not just in the country that you're resident in, but also the country that your beneficiaries are resident in, and indeed the country that the trustees of your pension fund are resident in. Now that can become very, very difficult. However, it is easy to do, or easier to do I should say, in some countries other than others. For example, in the UK, if you want to know about all of its double tax treaties, it has well over 100, with every country in the world. They're published on the HMRC website. You can simply log on, access them, download them and read them. Now I'm not suggesting you want to become a specialist in it, but certainly you can consider this as an option, and then you can also relay this information through to accountants in the country that you now live in. It's the same with the US, and it's the same with most mature economies and countries. This kind of information is fully accessible for free nowadays from their equivalents of HMRC websites. So, what about your pension then? Is there action you can take to ensure that you avoid paying tax in the country that you're resident in? Probably there is, but it's not going to be as simple as saying move it to B because in B you're not going to have to pay any UK tax. It just isn't that simple. Now I've written a full article about this and I've published it on our blog. I would urge you to have a look at that because I talk about some countries in particular. But I would also say at this point that consideration of inheritance tax and pensions often does go together. So if you're looking at one, you should probably be looking at both. And if you want to consider pension and inheritance tax rules, you really should have it considered by someone who's based in the UK, qualified in the UK, regulated in the UK, and indeed, ideally, has some kind of specialist qualification in the UK for those areas. Now I'm not just saying that because my company is, I'm saying it because by trying to save money now or doing it through someone who's offshore who has no comeback basically in the event of giving you wrong information, it could be a lot more costly later on than the actual cost of the advice now. So it's worthwhile considering that. Should you be considering anything else? Almost certainly yes, but I'm not going to go into that in this blog, but I will be discussing it in future blogs. So thank you very much for watching Insider Knowledge. As I say, the information is available on the website. Please remember to rate, comment and subscribe, and I look forward to seeing you again soon.